How's it going, folks? I hope it's great. Late night, but we got some earnings to talk about. It's worth mentioning them. Once we get off work, we got to talk about these earnings. It's great stuff. So NEO reported today, obviously a company I've been following for quite a while. Position I've had since the $2 range. So this company's blossomed quite a bit since that point, and obviously you see the performance in the stock really over the last several years, really since IPO in 2018 here, but really the main news happens here in 2020. This is where the takeoff story comes into play, up 1,000% really in a pretty short period of time, less than a year, so keep that into consideration. Now the stock was down 6% today and an additional 2.5% after hours. The intraday trading here of down 6% was actually more due to a following Tesla effect. So obviously Tesla got hit quite hard today too on some weird Elon Musk news, him just joking around as he does, and shareholders kind of sold out. So obviously it's not the traditional Tesla shareholder that sold out of that. That's the institution that sold out of that one, that's for sure, because an actual Tesla shareholder comes to expect things out of Elon Musk. They're a little bit odd. Let's look at these earnings though. Obviously one thing, and I'd mentioned it prior to these earnings too, and we talked about them. This is a company that I expected to beat on an earnings standpoint as far as the delivery numbers were concerned, which would mean revenue as well. And really we can see that just because of the fact that we look at the prior guidance, and then we can look at the actual delivery numbers over the last 3 months because they released the monthly delivery numbers. So we knew how many vehicles were going to be delivered this quarter. We knew it. And it was above the consensus. So that's pretty easy to see, and all car companies really do it. They release monthly delivery updates. So keep that in mind. But let's take a look at this. So a quarter three non-GAAP EPS comes at a negative 6 cents, beats by 4 cents, but a GAAP EPS line of negative 28 misses by 18. Was expected to be a 10-cent line here, which would be quite an improvement year over year too. Still hasn't found profitability, which I'm not personally not too concerned about. If you look at a company's history like Tesla, I mean, this is a company that received incredible valuation, regardless of if they were losing billions of dollars or not. So NEO obviously is in that phase of really growing that, and there's going to be a couple things I show you throughout this that'll kind of show you where they're working on growing that line, but would like to see that number improve a little bit quicker actually. But from a revenue standpoint, it was a beat by $50 million. So again, we saw the deliveries were over the estimates, so this is not a shocker. $1.52 billion, up 128% year over year. Really nice growth there, but again, this quarter was a really weak quarter last year for them. That barely showed growth at all. So this 100% growth number, not really sustainable when you're looking at the full year out. It's not quite that amount. So just realize that this is a very easy comp for them. But again, another over $1 billion quarter, which is really nice. So as far as guidance is concerned, in the fourth quarter, they're expecting deliveries to be between 23.5 to 25.5 thousand, which is an increase of 35 to 46.9%. And if you're looking at based off of the third quarter, it's a decrease quarter over quarter of 3.8 to an increase of 4.3. So expected to be relatively flat quarter over quarter, and I think that's entirely why this stock is down. So I don't think it's that bad in my opinion, but expected a revenue line right around 1.4 billion to 1.5 billion. Really exactly where they were this quarter, so it's really expected to be flat on this quarter. So nothing crazy, but it is still a 41 to a 52% increase when you're looking at the year prior. So really great year-over-year performance. Just quarter-over-quarter doesn't look quite as good. And obviously flat when you look quarter-over-quarter is expected there. So not bad. I mean, all things considered, I know the guidance is a little bit weaker, and I think that's why the stock's down, but I just don't necessarily see the reason for it. We're talking about a lot of good things really coming its way. I mean, I just don't see it. I don't know. Don't know how it's possible. And you look here at the delivery numbers and how they've been able to grow. from the lows here of the worst obviously period for them when they couldn't deliver anything last year, 3,800 vehicles, all the way to 24,400. Really continuous growth. I mean, you can see continuous growth. And again, here's where I say Q3 was a really weak quarter, and you can see that here too. They went from 10,000 to 12,000, but again, it was a weak quarter, mostly because of supply chain restrictions, so nothing shocking there. Vehicle sales came in at $1.3 billion, which is a 102% increase, which is nice, and a 9% increase from the second quarter. Vehicle margin came in at 18%, which is, again, in comparison to 14.5%. So a little bit lesser than the second quarter of 2021, so last quarter, but an improvement year over year. Vehicle margin is obviously where they're going to be able to make their money in the future, as well as some service revenue as well. So keep that into consideration. Total revenue, obviously, we saw 1.52. Nothing crazy. Gross profit came in at $309 million, but again, that is not the net income line, which we like to see. But it was an increase of 240% year over year. And 26% from the second quarter. So gross profit line did grow. So all things considered, the non-GAAP line looking way better than it was, and that's kind of what you're looking for. Loss from operations here came in at $153 million, which, all things considered, not too bad. Representing a 4.9% increase, which is cool. But if you exclude share-based compensation expenses, the adjusted loss from operations came in at 112, which is actually a 19% decrease. So again, that number impacted a little bit. Net loss at 129.6, which is a decrease, there you go, of 20%. So 20% less in terms of loss, which is fantastic. And again, if you exclude that share compensated expense, it was only $88.4 million that was lost in this quarter. So the growth trajectory is there in terms of the profit line. So it's pretty nice to see in that net income line. I still want the company to be profitable. I really think they need to hit that sooner rather than later. I think next year there's a chance they hit a profitable quarter. We're talking about Q3, Q4. It's not going to be a profitable year, though. Just keep that into consideration when you're looking at this stock. So, obviously, vehicle sales, great stuff. Recent developments, I want to look at this number. Well, it's worth looking at the net loss line. I mean, you can see this net loss line and how it's really, how it's improved. Obviously, not as good as last quarter, which is fine. But obviously, year over year, 42% increase, 42% improvement. Not bad. Not bad stuff. 20% decline. Love it. As I should say. So obviously October, they delivered 3,667 vehicles, which is a decrease year over year due to restructuring and upgrades in the manufacturing line. So this is an intentional thing. So that would be why. And again, this quarter could have been a lot bigger, but this is future growth planned, and they have orders in, obviously. So keep that in consideration. So as of this date, NIO has sold $33 million ADSs under the ongoing and at-the-market offering programs previously announced. That's pretty nice. Fun for them for raising money. I mean, again, this is a company that can infinitely raise money, and I don't know if I like that. I really don't. I prefer them not to be raising money consistently, but I understand that they have to, all things considered. I mean, it's something that could improve, and I hope they do. As we scroll down here, obviously we see the balance sheet on this company, and keep into consideration, this is in renminbi, so just consider what it equates to. I mean, it's important stuff. Total current assets, you see this line in terms of US dollars is sitting at $8.4 billion. If you're curious what that looks like, again, it's a 9-month comparison. It has increased by right around If you equate that out, it's closer to the let's just say the 15 to 20% range. So pretty nice increase in the total current asset line. Total assets in general rose as well by a pretty good margin. Right now sitting at $10.7 billion. Now let's look at the liabilities on this company. Total current liabilities saw quite the increase as well. So keep that in consideration. They nearly doubled, 4.1 billion. So it's growing there. Total liabilities in general also saw a massive increase. I mean, this is what's concerning. In my perspective, I'd like to see a little bit better of a line here. They grew liabilities quite a bit more than they did assets in the last 9 months. Nearly doubled that line too, 6.4. Now again, this is when you take it into consideration, shareholder equity is still there. Shareholder equity is a positive $3.8 billion. Wow, that hurt. So there's positives, negatives, I get it. If you look at NEO stock valuation, this is what it's worth looking at. $66.5 billion market cap. I think this is a very expensive stock. I think it goes without saying. We're talking about a company that's going to revenue closer on the full year. Should be revenuing, I believe the number's right around $5 billion. Just short of $5 billion, I believe. Based off of what next quarter looks like, obviously. Should be around probably a little bit over it. So they're trading at a pretty high multiple. We're talking about 13 times that multiple is pretty expensive. But for a company that's growing this fast, it's kind of what the standard is in the market right now. No PE ratio, market cap over 10, which 10 times the sales there. 10 times price to sales is not incredibly expensive in today's market. Just being honest with you. Definitely one, in my opinion, it's still a great hold. Is it a great buy? It's hard to say. Year to date, obviously down 24%. So in that sense, I would say this thing's worth buying at this point because I think this is one that you can hold long term. When you think about global expansion, when they're talking about Norway expansion, this is a good long-term hold in my opinion. I think it's a bet of mine, and I think obviously if you hold this one down the line in the next 5 years, this could be a company that's grown quite a bit more than what it is. I think there's obviously a limit to their market reach as more competition gets in the industry, but they need to become a massive player in the Chinese industry because that's a big auto industry alone. But then you talk about global expansion. Again, I think this stock will be it'll be higher. I mean, it'll be higher when you look at the span of several years from now. I think it will be. So is it a good buying point in the short term? It's hard to say. I still think EV stocks are going to be in a world of hurt for a little bit, unfortunately. So keep that in mind. I hope you enjoy this one.